The Federal Reserve cut interest rates again today, and this time by 0.25%. National correspondent Kayla Gaskins joins us from Washington with what Federal Reserve Chair Jerome Powell had to say about the decision.
On Wednesday, the Federal Reserve cutting interest rates by another 0.25 percentage point, despite inflation still remaining hotter than the target. It's the Fed's third cut in a row, but it came with a warning.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals.
President Trump wanted a bigger cut.
It could have been doubled, at least doubled.
The decision coming as President Trump nears the end of his search for a new Fed chair. One non-negotiable. Whoever he picks must support keeping the rate cuts coming.
Is it a litmus test that the new chair lower interest rates immediately?
Yes.
The current favorite for the position, National Economic Council Director Kevin Hassett.
They've got plenty of room to cut rates. They'll do a little bit this time, but they'll probably need to do some more.
The president has been framing rate cuts as part of a broader push to ease cost of living pressures for Americans, as affordability increasingly becomes a top issue for the 2026 midterms. Democrats working to pin high prices on Republicans in the White House.
1 year into the second Trump presidency, all we have are a litany of broken promises and billionaire tax breaks. This affordability crisis is not a hoax. It is a choice by congressional Republicans and by Donald Trump.
Trump hitting the road this week, aiming to take control of that narrative and sell his message on the economy.
We're bringing it down, and we're coming down more. We're coming down a lot more. Takes a little time to come down.
Touting his tax cuts and falling energy prices at a rally in Pennsylvania that felt like a kickoff for the 2026 campaign. As the White House argues lower interest rates will help consumers feel relief more quickly, critics warn that rapid cuts could fuel new risks, including higher debt levels and the possibility of an overheated economy. In Washington, I'm Kayla Gaskins.